and a very warm welcome to the Single Resolution Board Annual Conference 2024. I'm Susan Carroll, and it's my pleasure to be your Master of Ceremonies today. We're coming to you live in Brussels from the Egg Conference Centre, a once abandoned building that has been transformed into an event location and a hub for creative industries. So I think it's a very fitting place for our theme today, discussing progress and challenges for financial stability in an uncertain economic landscape. The conference will focus on readiness for crisis, building resilience, and dealing with new and emerging risks. Before we officially start, just a bit of information from me about our format and agenda. We'll start the day with a welcome from SRB Chair Dominique Labarrex, who will also launch the SRM strategy, Vision 2028. We'll then be honoured with an opening address from European Commissioner Mairead McGuinness. After that, we'll bring the two chairs of the Banking Union together, Claudia Buch, Chair of the Supervisory Board of the European Central Bank, and SRB Chair Dominique Labarrex for a conversation session. And this will be followed by a roundtable discussion with high-level panellists. After a well-deserved lunch break, we'll split into three parallel sessions: the Emerald Journey, the next phase testing and operationalization, and cooperation around new risks and digitalization. For those of you joining us online, the Emerald Journey session will be streamed, and the other two sessions will be made available via video recording on our website afterwards, as well as a report of the event. At the end of the day, we'll come back here to share our takeaways and learnings from the three sessions before a cocktail reception. The closing session will also be live streamed, but not the cocktail reception. Finally, a hint to all our speakers: we are on the record and we're streaming live via the SRB website, LinkedIn, and YouTube. Now, let's get started. It's my great pleasure to hand over to our host, SRB Chair Dominique Labarrex.
Thank you, Susan, and good morning to each of you. Thank you for taking the time to be with us here today, and it's an important day because it's Carnival Day, and so I see that you've chosen to go to a serious event and not to go to Carnival today. So thank you for joining us physically in this magnificent conference center or online, and your participation is really appreciated. Thank you for that. I hope we'll have a lively day of discussion and debate as we discuss the road ahead, risk, readiness, and resilience. You'll see, no doubt, that we have a packed agenda with top-class speakers. I want to say special thanks to each and every one of our speakers, because without their time, obviously, this event could not simply happen. Let me come back to the title of our event today, because each term matters. The road ahead means we are still traveling towards more financial stability, while there's a number of risks growing and or evolving around us. That's why we, all together, banks, authority, and all the other stakeholders need to be ready, which is the only condition to be able to increase the global resilience of our banking union even more. From that perspective, today is a very important day in the life of the SRB and more globally of the Single Resolution Mechanism as a whole, because we are launching a new vision, the so-called SRM Vision 2028, which is precisely connected to the different terms I have just commented on. Together, we've achieved much these past years, and now we have to evolve, having reached several key milestones. On the whole, Emerald deadlines have been met, and it's a big achievement. The banks have made significant progress to comply with the SRB expectations for banks, and this is a second big achievement. And the Single Resolution Fund has reached its target level of 1% of total covered deposits, and this is a third milestone. With that, now we have to build this new strategy, which is a new step in a more mature SRB. It's a new milestone in the SRM life. The strategy will guide us forward, and it will be a process of evolution, not revolution. This vision is a result of a strategic review we initiated of our operations and, in consultation with many of you attending this conference today, we've built, step by step, these new building blocks of a strategy. I would like to thank you for your valuable contributions here. We'll have a short video which will give you a snapshot of this strategy, but let me give you a few highlights immediately. 3 areas are covered by this strategy. The first one is exactly dealing with our core business. Our strategy will focus on the need to further improve our crisis preparedness. We'll develop integrated tools to respond to already known and any potential emerging crisis circumstances. We'll work on crisis-oriented resolution planning with an embedded risk-based approach. We'll review our resolution planning activities to focus more on the operational aspects and on testing banks' capabilities to handle a crisis. We'll also perform on-site inspections. The SRM will work to be the global reference in the resolution field, improve knowledge management, and keep building relations with European agencies and institutions, as well as international relations. The second area of this strategy is in relation to governance. We want to strengthen our structures so that we become more streamlined, more efficient, and more transparent. In particular, towards the industry, and I know that there are many industry representatives today in this meeting room and online. Let me mention already 2 first examples. The first one is last week, we published our calendar of surveys and requests to banks for the whole 2024 year. This unprecedented publication goes exactly in the direction of more transparency and predictability. Another example is the MREL policy consultation we launched 2 months ago. Today, by the way, it's the last day. If you want to answer, please do it quickly, because your answers will help us defining the future of our policy in this important area. Through the second pillar of our new strategy, I also want to reinforce the SRB NRA's integration and build a common culture within the single resolution mechanism. We'll also take advantage of a digital transformation and reinforce the SRM's and SRB's data capabilities while increasing our framework on cybersecurity. The third area of this strategy is focused on human resources, a key component of any organization. We want to harness the potential of a motivated young pool of talent by ensuring more internal and external mobility and career development aspects, while improving staff training. We'll also increase the focus on diversity and inclusion in the SRB. Our new strategy will better equip the SRM to deal, as I said, with its various challenges to ensure banks can be resolved, thus contributing to financial stability. I'm not forgetting indeed about financial stability, that just a few weeks into my mandate, we saw the turmoil coming from the US and Switzerland. Europe has emerged relatively unscathed following that market turmoil which began to emerge almost 1 year ago. That was, this is what I think strongly, that was the dividend of the regulatory, supervisory, and of course of the resolution planning work of the last decade. 12 months on, we must remain vigilant, absolutely vigilant, as new threats emerge from asset quality deterioration to heightened geopolitical risks. But to remain vigilant does not mean that we should not recognize the efforts made already. And so, taking into account these evolving threats, we've decided to reinforce our structure immediately without waiting for the adoption of a strategy. So we've made some changes, and I will give you 2 examples here. First, with my fellow board members, we've built a unit in charge of crisis management, reinforcing the embryo of what we had in the past. And we've created another one on risk management, crisis risk. Clearly, the aim of these new units is to enhance our efficiency and readiness to handle a crisis. More broadly, looking ahead, I also hope that we'll see the approval of CMDI soon, including all its parts. Not because we think that the toolkit is not complete yet. We have an efficient toolkit, but we can do even better. And this reform is an important signal to send a signal of trust into the resolution framework and in the banking union. And we need it now. Ultimately, because we want to be sure that our resolution toolbox is even more complete than it is today. Whatever compromise the co-legislators may find on the CMDI's funding equation, they need to make sure it delivers, let's say, something like a similar result to the Commission proposal. More concretely, what I mean by that is that if the scope of banks under SRB's remit is extended, we need sufficient funding solutions to execute successful resolution transfers. Short of its funding element, the core of a CMDI proposal will lose coherence, and we'll find ourselves facing the possibility of having to resolve banks for which we do not have the right tools. Then, obviously, liquidation, often with the help of taxpayers' money, may become the only option. And this is the one of the past, and we want to avoid it in the future. Let's see how the CMDI proposals advance in the weeks ahead. I'm sure that our panel in a minute will come back to this topic and we'll discuss it thoroughly. Let me now conclude. Today, we gather here in Brussels, and I want to assure you that if we are gathering here all together, it's for, let's say, building together a common understanding of the issues we are facing today. I want to assure you that we'll continue to work hard to continue delivering financial stability to all European citizens at no cost to the taxpayer. Let me come back just 1 second on what Susan said already about the 2 days conference. We have renewed its format for those attending the previous ones who attended the previous ones. You remember that the location here is very new compared to the previous one. And we've changed the format, and you will have panels this afternoon. So it will be very important that you give us your feedback about what you think about this new format to charter the next editions of this conference, obviously. And I trust your judgment here. We have here among us, and Susan said we were entirely on today, because we have a good media contingent today with us. And I think it's important because our journalists are playing here a very important role. They are, if I may say so, storytellers, the ones who have an important role to play to explain, to pass the messages, and I would like to thank them for attending this meeting with us today. Finally, let me thank again our speakers and all of you joining us here and online, and I encourage you to take an active part in the discussion. Before closing, I would like to make an official announcement, which was longly awaited by the industry. I'm pleased to announce, as I said at the beginning of my speech, that we have reached the 1% coverage for the Single Resolution Fund. So that means that I can tell you today that we won't be issuing a request for contribution for this current year, 2024. I think it was longly awaited. It's a very good piece of news for you, but also for us. Thank you very much. Let's enjoy the conference, and now let's look at the short video presenting you the new strategy of the Single Resolution Mechanism. Thank you very much.
With its mission to protect financial stability and the taxpayer, the Single Resolution Mechanism has built a robust and effective framework for preparing for and managing bank crises in Europe. Working closely with the banking industry, the European Central Bank, the European Commission, and other stakeholders, the SRM's stable foundation is crisis-ready and resilient. We have built up the Single Resolution Fund. Banks have met their MREL targets, and our expectations for bank resolvability have largely been met. But we are not stopping there. The SRM is evolving to meet new risks, challenges, and opportunities. The SRM Vision 2028 strategy is a blueprint to ensure we stay resilient and ready for any crisis. Based on our expertise, our commitment to serve European citizens, our collaboration with our stakeholders, our focus on transparency and communication, and as a great place to work. What will we do? Well, among other activities, we will shift from building up resolution plans to increasing our preparedness to deal with emerging risks for stronger resilience in the financial sector. We will test resolution plans and make them operational with a comprehensive plan for resolvability testing. We will continue to increase transparency and will provide clear and timely feedback to the banks on their resolvability and MREL. We will integrate our work in the SRB and national resolution authorities even more, as well as simplifying and increasing efficiency. We will act as an international centre of expertise for resolution and enhance our cooperation with global stakeholders. We will harness digital technology to achieve our mission with a dedicated innovation lab. And we will help our staff reach their potential, as well as improving gender balance and diversity. With clear goals set for the next 5 years, we will achieve our mission of being ready to protect financial stability and the taxpayer with a flexible, agile, and resilient single resolution mechanism.
Many thanks, Dominique. And if you would like to see that video again, which I'm sure you do, it's available on our website and also on our YouTube channel. Now let's turn to our opening address. And I'm very pleased to introduce Mairead McGuinness, European Commissioner for Financial Services, Financial Stability and Capital Markets Union.
I'm very impressed by the high tech, I have to say, and I'm very nervous speaking after a video which was so effective in terms of communication. So firstly, Dominic, thanks to you for the invitation to be here. Thanks in particular for your strong opening remarks. But I think that video encapsulates everything that we need to see, and my best wishes that you can deliver to the plans that you put in place. We're looking at the road ahead here. And I think everyone in this room probably has a different version of what lies ahead. But it's fair to say we all see a lot of risks, a lot of uncertainty, a lot of insecurity. But there's no point in standing still. So we have to address all of those issues, those that we know and those that we are less clear of. I like the idea behind the theme of this conference, looking on that road ahead, but also addressing risk, readiness, and resilience. And I think it's that final, or that resilience piece, which is I suppose, the product of looking at the risks, being prepared, and resilience matters across society, and it particularly matters in our financial system, because we have come a long way since the global financial crisis in 2008. Our banking sector in Europe has shown remarkable resilience, and that is in large part due to financial regulation reforms put in place over the years. We can thank the Single Resolution Board for helping us come this far. And thanks, Dominic, to your leadership and indeed to your predecessor, Elka. We are here today to focus on what's next, and we've had a very good look at what the plans are here. Because we do need to think about how we can ensure that EU banks can continue to be strong and support citizens and businesses, how they can remain competitive and face the challenges ahead of us. So I very much welcome the Vision 2028 of the SRM. And I do really welcome the forward-looking approach being taken by the SRB. I'm going to do a little bit of gazing ahead myself into the future. And I'm going to talk about why we need to finish what we started with banking union and what we need to do to complete banking union. I've had to realize myself that sometimes you have to say the same things all the time in order for it to register that we haven't changed our mind about the importance of banking union. I worry sometimes that my script is repetitive, but I make no apologies for it being repetitive because I think these messages are important, and without progress, we need to understand the consequences. There will always be risks, expected or unexpected. If you look at the world today, we are being buffeted by geopolitical and economic headwinds. We had the global pandemic and we saw the economic impact, but we also saw how Europe was resilient. And indeed, European banks came out of that period well capitalized. But the outlook for profitability was challenging, and banks had many more indebted clients. Then we had to contend with, and are still dealing with, Russia's illegal invasion of Ukraine, which disrupted all sectors. Food, commodities, energy prices all increased rapidly. Together with the combination of the recovery from COVID and remaining supply chain challenges, this triggered a spike in inflation. And in turn, we had a tightening of monetary policy. And banks now find themselves in a fast-changing landscape. Higher inflation and rising interest rates present different challenges to financial stability than low-for-long interest rates. We also have longer-term trends that are transforming our economies and societies. The sector is in an era of rapid technological change, which was massively accelerated by the COVID pandemic when banking went largely online. It means banks can develop new products and services for customers. But there is a particular risk from cyber attacks that banks need to build their resilience against. It's ever present and will not go away. At the same time, we're ramping up action on climate, making sure that we get our economies and societies ready for a more sustainable future. Our banks have to manage risks arising from climate change, whether those are the physical risks from climate-related natural disasters or the transition risks as we move to a net zero economy. So we hope the road ahead for all of us will be smooth, but we should not rely on that. What we can do is to be ready and prepare for risks. We need to build resilience into our systems so that we can deal with expected and unexpected risks. And that brings me to my point on banking union, which is that we need to do more and we need to strengthen our banking system by completing banking union. We need to make sure that the European banking sector can cope with whatever tomorrow brings. Banking union is about making our banks stronger and more resilient, prepared for the worst if it comes. Now, last year we had a stark reminder, if we needed it, of what can happen if a bank fails, though fortunately, in this case, we were not talking about banks within the European Union. The failures of some US regional banks and Credit Suisse were very stark reminders of how things can go wrong. Now, specific national factors played a role in these cases, as did digitalization in the financial system, which allows for rapid movement of deposits. there's no longer any need to stand in a queue outside a bank to collect your notes. In fact, I think younger people don't understand what a queue would mean at a bank because they don't go physically to banks. But if I look to events in the US and Switzerland, they did not spill over into the EU. There was no contagion, demonstrating EU banks' resilience and sound supervision. But it would be wrong to say that we were not concerned. Of course we were concerned. This episode shows why it's important to continue with reforms to make sure that our banks remain safe and sound, rather than resting on our laurels of complacency. And I know that in this room there is no complacency. Looking beyond preparation for a future crisis, as important as that is, a complete banking union would bring wider benefits too. And sometimes this is not really fully understood. It could boost banks' profitability and competitiveness, allowing them to scale up their activities within the single market. And the advantages would extend far beyond banks themselves. I don't often, if ever, get asked by the man or woman in the street how banking union is progressing. But I do get asked very fundamental questions like, why can't I get a loan in another member state or a mortgage? Why do some banks in other member states offer long-term mortgages with fixed interest rates? And why can't I get that at home? So people do understand that there is a fragmentation in the financial system in the European Union. It's why they ask these very basic questions. And of course, it's not just for individuals and families, but also for our companies that these issues are important. European companies still depend on banks for most of their financing needs, and that's particularly true for SMEs. So are European companies able to compete fairly in the single market if they face different conditions when it comes to banking? And of course, if there's not a level playing field, there are differences. It's clear that the need for banking union is as great as it ever was. And we need to communicate to citizens the concrete benefits of a banking union, like the protection of taxpayers' money in case of a bank failure or the protection of bank deposits. And the banking union also ensures EU's financial stability. Those who remember the great financial crisis know how financial instability can be a long-lasting drag on economic growth, employment, and more generally on prosperity. Now, there is good news, and the good news is that we have made significant progress in banking union, starting more than a decade ago. We have a single rule book that applies across the whole of the EU. We have a centralized system for supervision through the single supervisory mechanism, which does what it was intended to do, supervise the European banking system, and it has worked well in complex circumstances. It took a flexible supervisory approach in response to the COVID crisis. It has also been proactive in tackling interest rate risks in the new macroeconomic environment. We have a centralized system for resolution, the single resolution mechanism, as the people in this room know only too well. If a bank gets into trouble or even fails, then banking union is there to ensure a quick response. The Single Resolution Board and national resolution authorities have made sure that this system works well. It safeguards financial stability while also protecting taxpayers and depositors. So, for example, and thanks to your work, most banks have set aside enough resources to absorb losses in case of a crisis. Alongside this, we have the Single Resolution Fund, paid into by EU banks to protect taxpayers' money. And indeed, Dominique, it's great to hear the news that the fund has reached its target levels, and indeed has done that on time. Banks have also significantly improved their resolvability, which means that in a crisis they can be wound up or restructured in an orderly way. And this can be done in a way that prevents disruption for the banking sector, all the while safeguarding the financial services that people and businesses rely on from their banks. But there's always a but, and the but here is that we still have a lot of unfinished business on banking union. So given my host here today, I want to mainly focus on resolution. We have a lot of measures in place for resolution, but there is undoubtedly room for improvement. So first, crisis management and deposit insurance. This is about how the EU deals with the bank crisis in an orderly and efficient way, And as you heard from Dominique, we adopted a proposal to reform the rules in April of last year. And we did those rules based on our assessment of how things have worked in practice. It reinforces the two fundamental goals of what emerged as the consensus on resolution after the great financial crisis: safeguarding financial stability and protecting taxpayers. The review is in the works for a long time, so it is not a response to the banking turmoil of last spring. But those events underscored the benefit of strong prudential rules to reduce the likelihood of bank failures. When it comes to our Basel standards and implementation, I'm particularly satisfied that we have finalised all of those details, and indeed that we apply those standards to all banks, while at the same time we use the flexibility in the Basel Agreement to take into account the characteristics of the European Union economy. So again, on resolution, for example, how the resolution of a bank is prepared and planned is important. We need to make sure that resolution tools work effectively when a crisis happens. And in this context, I want to acknowledge the strategic review that Dominique has initiated. The SRB, the Commission, the ECB, and the EBA, with national resolution authorities, are working together on the future of the single resolution mechanism, and looking at how cooperation can be strengthened. And we can draw lessons from the US and the UK experience with Silicon Valley Bank. That showed that resolution authorities are well aware of the contagion risks from imposing losses on depositors and cutting them off from their accounts. We have a real-life illustration of the impact on the economy and on market confidence. And we saw what potential bank runs might look like in this ever-digital age. We also witnessed how the US authorities use the tools they have in a flexible way to deal with those cases. Now, it's true that Silicon Valley and Signature Bank were outliers with a very high concentration of uninsured deposits. But we observed a similar reluctance to impose losses on deposits in Europe over the past years. Your average citizen's deposit could be well covered by the deposit guarantee up to 100,000 euros. But over 100,000 euros, those uninsured deposits, may belong to public service providers or educational institutions or indeed local businesses. It is a tough political decision to impose losses on them and put their access to banking services at risk because of a bank's failure. And this is one of the main reasons that the failures of smaller and medium-sized EU banks have often been addressed outside the EU resolution framework, often using taxpayers' money instead of making investors, creditors, and the banking sector itself pay for the failure. So our proposal aims to broaden the scope of resolution and the use of EU resolution tools. But this does not mean that all banks will be resolved. That was never our intention. Instead, we wanted to better frame the criteria for resolution authorities to decide how to proceed, whether a bank should be resolved under harmonised EU rules or liquidated under national insolvency proceedings. But resolution authorities will continue to be able to make their own assessment and use their own judgment just as they do today. And they will ensure that they can use the most appropriate tools, whether that's resolution or not, given the circumstances of the bank in distress. We took national specifics into account and kept the continuum of tools intact with precautionary recapitalisation, preventative and alternative measures using deposit guarantee schemes, resolution and national insolvency. While at the same time, we have to frame the system in a way that ensures legal certainty and a level playing field while protecting taxpayers. Another important lesson is that shareholders and investors must carry the burden of a bank failure. And this is actually what happened in the US. Additional funding to support the sale of valuable assets and deposit books came from the US Deposit Insurance Fund, which is now being replenished by the banking industry. The crisis management and deposit insurance reform also aims to enable resolution authorities to shield depositors from losses if they consider it necessary. For this purpose, deposit guarantee schemes and resolution funds could be used more efficiently to manage a bank crisis instead of using taxpayer money. Shielding depositors better may be even more important today as digitalisation increases the speed of bank runs. The first line of defence is and must remain the internal resources of the banks. Those who decided to invest in a bank must be the first to pay for its failure. And in fact, US authorities have confirmed that outcomes would have been better with resolution plans and loss-absorbing buffers in the affected banks. So this confirms that the EU's decision to apply resolution-related requirements to a broader range of banks is a good one. But when it's more efficient and justified by the public interest, the industry-funded safety net should come as a second line of funding by facilitating the transfer of a failing bank to a sound buyer or a bridge bank. Economically, this kind of transfer strategy has proven the most efficient at maintaining access to deposit accounts, fostering depositor confidence, and reducing the incentive to run. In those circumstances, the failed bank would exit the market, and shareholders and investors would bear the losses. I want to thank the SRB, the ECB, and the EBA for their valuable support for our proposal. The European Parliament and the Council have been working hard to agree their positions on the Commission's proposal, and so far good progress is being made, and I hope that that will continue. I welcome the Belgian Presidency's ambition to find an agreement in Council before this summer. It is important also that the Parliament adopts its own position before the elections, which loom large. This would allow trialogue negotiations to start soon after the new Parliament returns post the elections. I think this timeline is doable, but I acknowledge that everyone will have to work particularly hard to meet it. Finance ministers have committed to adopt the CMD reform this year, and they committed after that to come back to the unfinished business of banking union. And here the big one is, of course, the European Deposit Insurance Scheme, EDIS. We need EDIS so that all depositors are equally protected, no matter where they are in the banking union. And then beyond EDIS, we need to think about appropriate rules for banks' holdings of government bonds. And then there is the question of how we make the most of our single market for banking. More integration across the single market. This is key to providing better banking services to both citizens and businesses, and to help EU banks be more competitive globally. There is a close link between banking union and capital markets union, and as you know, we are working hard on both. Our banks play an important role in key segments of capital markets, like trading, investment banking, underwriting, treasury, or depository services. Banks are also key players in helping people save and invest for key milestones in life, mortgages, buying a house, or indeed pensions in retirement. So integrating our banking markets go hand in hand with deepening our capital markets. A complete banking union can help the development of a truly integrated EU capital market by facilitating the emergence of more banking groups that provide financial services to companies and investors across our member states. A genuine capital markets union can also give EU investment banks the scale to develop their activities in a profitable manner and compete internationally. Banking union and capital markets union are mutually reinforcing projects, and in one sense, we can't really have one without the other. And we all agree about the need to make urgent progress in building a true banking union and a true capital markets union. And I think the time is right and the time is now, because we do need to be bold and tackle all the obstacles that have been put in the way on the road ahead. And that means removing barriers to the free movement of liquidity and capital. It means facilitating bank consolidation, making progress on our proposals on insolvency rules and withholding tax procedures, putting in place truly European supervision. A single market for banking and capital would never be a threat to financial stability or take away opportunities from people and businesses. In fact, the opposite is true. After all, a deepening capital markets union will strengthen the resilience of the banking sector to economic shocks by delivering increased private risk sharing across member states. And finally, we must also finalise the implementation of the ESM backstop to the Single Resolution Fund. This is an important piece to make our crisis management framework truly effective. This treaty was ratified in all but one national parliament, and that speaks to the commitment of euro area countries to strengthening the banking union and to ensuring that citizens and small businesses are protected in a bank crisis. Without the ESM backstop, we're missing an important tool to help protect households, taxpayers, small businesses from the costs of a major financial crisis. Indeed, without the ESM backstop, it's also difficult to talk about liquidity and resolution, another element that requires new focus. As shown by last year's US and Swiss bank failures, providing liquidity funding to an institution in resolution is key to stabilising that institution, swiftly restoring market confidence and limiting contagion. Reflections on this are ongoing internationally, and we will certainly come back to this issue. It's regrettable that this element of banking union is still not in place, and it could hinder progress on other parts of the banking union agenda. The best way to ensure a resilient European banking sector that is future-proof is to complete banking union. And we have come a long way already, but sometimes the last steps are the hardest. And we've come a long way due in large part and thanks to the work of the Single Resolution Board. But we still have work to do, and I think it's really important that the message goes out loud and clear that the time to build resilience against risks, those we know and those we don't, is now. It's not when those crises hit us. Thus far, we have been well prepared because we learned from the financial crisis. And I think we need to keep that same level of readiness and resilience to all of those risks that lie ahead. But the vision for 2028, in my view, is an excellent starting point. So thank you for that, and thank you for your attention.
Thank you very much, Commissioner. I think you have set the scene perfectly for our discussions today. Now let me invite to the stage our two chairs, SSM Chair Claudia Buch and SRB Chair Dominique Leberex, with moderator Maria Tadeo for our In Conversation session. Please